What's going on, everyone? So today we're just going to do a quick breakdown of the 200 point long, which was actually like a nice 1 to 6.4 risk to reward ratio long that we ended up actually catching during pre-market and then going into New York Open. As you can see, we actually ended up going break even a few times betting on this early, but again, this was an eval trade for us rather than on a funded or a live account. So we were obviously willing to be a lot more risk on and kind of hold for longer essentially. But again, ended up catching a nice 200 point long or 1 to 6 point risk to reward. So yeah, let's show the telegram of the call out and then let's get into the trade breakdown and explain why we took it. So why did we end up taking this trade? Well, obviously you can see here as well that we ended up getting stopped out at break even twice in a row trying to catch this trade early. But again, reminder, these were just eval trades. So we were being a lot more aggressive with our entries. But so essentially what happened was since the start of the week, obviously you can see here we've got the new week opening gap. Price has seen extremely strong bearish delivery to the downside, right? And we've seen not much mitigation of that, not much signs of price kind of changing high time frame order flow or changes to delivery, right? Essentially, what we were betting on was that for sellers this market was extremely premiumed. Essentially, the risk to reward of continuous shorts was obviously tightening, and price needed to rebalance, right? So obviously, simply put, markets always move to hunt liquidity, rebalance inefficiencies, rebalance equilibrium, and generate more liquidity. Sorry. So obviously, you can see here, price had been generating an extreme amount of trendline liquidity and buy side above. We had huge external draws such as previous session draws, previous day highs, and obviously the new week opening gap that didn't end up getting tagged. But again, market was due a rebalance. Obviously, the market was extremely premium for sellers, and we had little mitigation of these low time frame inefficiencies and these external draws on liquidity. Right, so before we get into it, we're just going to quickly go over why we took the trade, and then obviously when you're looking at the charts, you'll be able to kind of put two and two together as we talk over it, right? So before we get into it, it's important to remember that we were being a lot more aggressive because this was on eval, not funded or live. But essentially, price was becoming extremely premium for sellers, and shorts were essentially seeming too free, as had price had continuously nuked off of macro data continuously, and the whole uncertainty surrounding Greenland, and obviously Trump was throwing the word tariff around again, which was obviously causing traditional markets to begin to de-risk. Sell pressure was being absorbed then into the 4-hour PD array after sweeping a strong external draw, which was the previous day low. And we then had a low time frame bullish SMT inside the PD array after the sweep with yes, and then respected low time frame bullish order flow after price failed to invert the 15-minute on the first attempt. We then had a 2-minute IFVG out of the 4-hour PD array on the manipulation leg of the failure to invert the 15-minute as price souped and then reversed. But obviously, as we said, we respected bullish order flow, indicating that the local low could be in. And then obviously price wanted to see bullish delivery out of a high time frame PD array with absorption, a soup, and a bullish SMT, which then obviously would then give the fuel for price to deliver higher to further external draws. We had clear external draw on liquidity as price would be looking to rebalance after being extremely premium for sellers as previous session highs, previous day highs that were left unmitigated. And this rebalance would also generate more sell side liquidity beneath if price were to continue its higher time frame narrative due to the running macro uncertainty and if TradFi were to continue to de-risk. Right, so then what did we see? So coming into coming into pre-market, obviously we were on the market during London. Essentially what happened was we could see that price was respecting this 4-hour gap or trading into this 4-hour gap, right? We'd mitigated all of this sell side from here, all of this LRO here, and now price was being absorbed, selling was being absorbed into this 4-hour imbalance. If we scale down again, essentially what we can see was that during London, price ended up sweeping previous day low, which was great as an external draw, right? So we had a sweep of an external draw of liquidity, and if you watched our strategy video, you can probably kind of guess where I'm going with this. So as we can see here, price swept an external draw liquidity on one side of the range. Then obviously now we've traded into a high time frame PD array. Great, even better. So now if we look down, if we scale down onto the lower time frame, as we traded into the 4-hour PD array, then you can see obviously this was previous day high. We ended up having a bullish SMT with ES, which was great as it kind of signified, right, cool, we may want to shift low time frame order flow. And then obviously, since we're looking at NQ, our condition kind of going into this session then was this 15-minute inversion, right? If the 15-minute inversion came out of delivery from a high time frame PD array with a sweep of external liquidity, with a bullish SMT, again for us this is ticking more and more boxes for us, wanting to bet on a rebalance, right? Especially with all this strong drawn liquidity here. For us, obviously the main targets were previous day high and previous session high, which was Asia's high up here. But again, what we saw was, obviously you'll be able to see this was the candle here. The 15-minute didn't end up inverting that candle. Sorry, that PD array, right? But what gave us more confidence going into New York that, right, price is going to want to rebalance. So what happened was NQ, sorry, not ES, made a strong attempt at trying to invert this 15-minute gap, came down, but failed to shift, failed to continue low time frame bearish order flow by taking out this low. Same on ES. So now what we saw was that, right, cool, both pairs essentially, if we put this in layman's terms, came up, didn't have the fuel essentially to invert the gap, came back down to the PD array as one final manipulation, respected the new low time frame bullish order flow. Then we ended up getting a 2-minute inverse fair value gap, which was extremely strong. As you know, this is now ticking a lot of boxes if you watched our trading setup video. And then obviously made the move to take out the 15-minute inversion, which was again where we ended up entering. But as you can see here on this manipulation wick here, we ended up getting stopped out right at break even. But due to the extremely strong reaction out of this PD array that we had here, which is why we ended up re-entering, kind of, obviously again, remember this was eval trades, right? So we ended up entering again with the same size. And then obviously, because we're on eval, we're trying to hit specific, obviously, profit targets to reclaim another funded. So full TP for us as we mapped it out was the 311, but obviously we ended up closing out at 301 because we obviously we ended up hitting our profit target. But overall, an absolutely nice trade. As you can see, we started to get the manipulation then leading into New York. But also what we put in the Telegram was, as you can see, price then started to trade into this this 30-minute bearish imbalance, right? If I load it up on the 1 minute, right? So price traded into this 1 minute, this 30-minute bearish fair value gap, was failing to trade above it. Then I believe it was a 2-minute inverse fair value gap to the downside we had. If I can find it, sorry. Right, yeah, so it was a 2-minute bearish inverse fair value gap, which was extremely strong. And we did put in the Telegram that we wouldn't be surprised if price was to deliver lower. But then obviously now, if you look at this kind of dotted line here, that's New York Open, right? And then typically what we do like to see as added confluence, the price is going to go in our desired direction, is a Judas swing at open, right? Judas swing essentially being a small manipulation leg to bait out traders that are front running the actual move. Bait in new directional traders and then stop out the ones that were obviously front running the actual move. Mitigated this LRL here, respected the 1 minute bullish fair value gap to the upside. Clean inversion of this straight away. And then obviously we just kept on rallying. So again, if we were trading this on a funded, we would have been nowhere near as aggressive as this. We probably would have TP'd at this level right here, the 30-minute imbalance. But again, this was eval, so we were being a lot more aggressive. So again, if we just go over what ticked our boxes, price was extremely premium for sellers, so price needed to see a rebalance. Price traded into a high time frame PD array and mitigated a high time frame external draw liquidity, which was previous day low. Had a bullish SMT inside the PD array with price respecting low time frame bullish order flow on the retest, which was this here. Strong 2-minute IFVG. We also had the 15-minute bullish IFVG. We had clear trend line LRL that price would have wanted to mitigate. And we had a clear external draw on liquidity that price would have wanted to draw towards. Again, as you know, this is ticking a lot of boxes here. Overall, very aggressive, very speculative from before the move, but obviously ended up going out in our favor. 1 to 6.45 risk to reward, and yeah, just around 200 points. So really and truly can't complain.
See you in the next episode. Magnus, out.